Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I've been a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Thursday edition of Benzinga's Pre-Market Prep. Spencer Israel coming at you live from Chaikin Analytics HQ in Philadelphia, joined by Joel Elconin and Dennis Dick and Marc Chaikin, who will join us momentarily. On the show today, we're going to talk about Walgreens, what a quarter they had. I guess it doesn't matter. Last I looked at the chart, they were trading down. Nike is after the bell. We want to talk about that. We want to talk about the financials, who are likely to see some volatility ahead of round 2 of the stress test results later today. We're going to talk about Chipotle and what else Marc Chaikin is bullish and bearish on. Like I said, he'll join us in a few moments. Joel, what is happening this morning in the S&P futures?
S&Ps are flat here, 27.05 and a half. That's up one tick. We had a little rally overnight. We went to 17 and a quarter. I was looking for 18 and a quarter for a lower risk short. We didn't get that, and now it's just been a slow leak here. The pre-market low is 0275. Yesterday's low was 01 even. Monday's low was 2,750. So that is 2,700 is the level of the day. If we breach that, it needs to get back above it quickly. But the bulls are making a stand here at 2,700. Crude down 26 cents. Big rally yesterday. Finding sellers at 73. 73.06 was your high from yesterday. Current high 72.97, 72 and a quarter low. So potential double top here in the crude oil market. Gold in the red by $3.30 at $12.52.80. Silver just hanging over there above $16. $16.10, that's down to 14 cents. And if you want to look at a sleepy chart here, what is going to happen at 6,000 in Bitcoin? We have 4 days of ranges just hugging 6,000. Now, conventional wisdom says the trend is down, hanging over the lows, can't get over the lows. Are we heading to 5,000 in Bitcoin? Dennis, how you doing this morning?
Not too bad. Just looking at this market, kind of a chop fest, like you were saying overnight. It feels like it wants to come down, but for some reason, they just keep finding buyers. So you basically got this battle here, at least overnight in the S&P futures, between the buy the dippers and the sell the rippers. And the people who are selling the rips were selling it as we obviously went up 7, 8, 10 points on the S&Ps. And every time we came back down near settlement, we found buyers. I feel like, the 2-day move says we're going to go lower here today. I feel like some of these tech stocks want to come down, besides Netflix, which just gets a price target raise every day. But besides the point here, I feel like yesterday's sell-off was significant. It was a tell that I think there is still more pain ahead for the overall market. I am net short here today just because I think this market's going to give back, and it pretty much has already.
Okay. All right. And I got a little short position on too, Dennis. So we are on the same side on this one.
When we're on the same side, that's usually trouble.
Okay. I'm gonna read the Walgreens earnings. We'll go to the chart, and then we're gonna bring Marc on who to discuss it with you guys. So we'll start with the Walgreens numbers. The Q3 EPS there, $1.53 versus $1.48 estimate. Sales $34.33 billion versus $34.16 billion. So a beat on the top and a beat on the bottom. A $10 billion buyback, not a typo, $10 billion, and they're raising their quarterly dividend 4 cents a share from 40 cents to 44 cents. So all in all, a good report. Oh, and I forgot to mention, they raised the fiscal year EPS guidance. So all in all, good report all around for Walgreens.
This is your classic example of the market we're in here right now. So you look at this, they beat, they raise guidance, they do a $10 billion buyback. Stock initially pops, just met with sellers. Every single time it seems like something's popping now, it's getting met with sellers. It's sell the rip. That's what the market has turned to. The sell the rippers are winning here. And if we look on WBA, all of that good news, stock is trading down.
All right, John, you did have the good news earlier in the week that it was being added to the Dow and GE did take it out. And you got a bump off that. That looks like it was a bump to sell. Let's just look at support in this, right? Because we're trading in the red. We're in the red by 65 cents. Your current pre-market low is 65.21. Let's look on your dailies, and you got a low at 65.42, and now you're filling a gap. I look for this thing in a weak market here to fill the gap, easily trade under 65, maybe reach 64.76. But let's bring in Marc Chaikin of Chaikin Analytics, joining the show live from Philadelphia. Marc, how you doing on this Thursday morning?
I'm doing great. Really good to have part of the team here in Philadelphia. Spencer's been a real eye-opener. And with regard to Walgreens, you got two things going on. Chaikin Power Gauge rating turned bullish about 3 weeks ago. And we've got that Dow syndrome. The stocks that get added to the Dow typically go down, and the stocks that get pulled out of the Dow typically go up. Interestingly, Power Gauge rating is bullish on GE. It's working. Maybe they let that spike, sort of create a selling opportunity. I don't think there are that many traders who are going to trade that pattern short term, but longer term, the selection committee has a pretty flawless record over the first year of a new stock coming in.
I mean, it was such a tough market there yesterday, Marc. What did you think of the trading action? I mean, here we were yesterday. S&P's trading significantly higher. Dow was up, I think, 295 points at one time. And then the afternoon comes and they just find sellers. And not only do we give it all back, we close hard in the red. So it was substantial selling pressure, basically from 11 o'clock on. What are your thoughts here on the overall market as we really got hit hard yesterday?
Well, we're bullish on the market because we think second quarter earnings are going to come in very, very strong. FactSet is estimating 20% year over year gains. Now, in the first quarter, we had a sell on the news mentality. So will that happen again? Don't know yet. I'm concerned, even though we're bullish, that corporate guidance may be downbeat because so many firms are being whipsawed by the Trump tariff policies that there may be a sense that, hey, we're going to hold off and wait and see how this plays out. In general, I think this time we may see people buy the earnings. The biggest risk in the market speaks to exactly what you just talked about yesterday. I call it headline risk. The risk of getting whipsawed by Steve Mnuchin coming on and saying that, well, no, we're going to let China invest. And then you got Larry Kudlow saying, no, there's been no change. I call that headline risk. It's the risk of being whipsawed in your trading positions by reacting to the headlines. So that really explains what went on yesterday. You had the tech stocks rally initially when Mnuchin said, no problem with Chinese investment, and then Kudlow sort of cut him off at the knees.
Right.
The message is not consistent coming out of Washington.
That's conflicting, and that's why you saw the rally and then the sell-off. So we are driven in a headline market here right now, really. I mean, the next headline is going to drive us. It's hard to be a pure technical trader when you have these random headlines coming out at you, Marc, and changing the whole theme or the fundamental or macro picture.
This is why the whole Chaikin approach of combining fundamentals with technicals is a real blessing in a market like this. You're right. If you rely solely on the technicals, a lot of whipsaw. But if you know what the fundamentals are and where you feel secure and like the story, and a good example of that is Chipotle. This is a stock where the power gauge turned bearish over 2 years ago at 690 on the way down to, I guess, 280. It's now bullish. And there are a couple of stories yesterday that I think support that bullish case. They're going to close about 65 stores and revamp the menu. The new CEO who came in from Taco Bell is really making a difference. So here's a stock where there was a definite change of character about 2 months ago. The power gauge picked it up, turned bullish about 6 weeks ago. If you know you like Chipotle, you wait for a pullback. We're getting a bit of a pullback, and you step in and you ignore the headlines. Chipotle is not going to be affected. In fact, mostly domestic. So actually, these stocks are like a safe haven with the tariff headlines, really.
The only problem is there is a headline overnight here with Chipotle. So it is obviously trading down on that headline. Spencer is in the background there. I don't have the headline in front of me, and I've already forgotten my goldfish memory, but we do have Chipotle down 15 points, and I believe they announced I'm trying to
they
find it.
maintained.
My news guy isn't there.
No, I got the pro up, Dennis. Just give me a second here. Stevens and Companies maintains an equal late on Chipotle. They raised the price target.
There was commentary from the company last night, so not ratings. They came out. They said they're shutting down 55 to 65 underperforming restaurants.
Yep.
And the Q2, they were going to take a hit in Q2 of 50 to 60 million.
Restructuring.
And, 115 to 135 million non-recurring charges. So they're basically saying Q2 is going to take a hit, and they're closing some underperforming stores, and that's why you're seeing CMG kind of get hit here. But to your point, Mark, I mean, even though you're down 15 points here today, this stock has been an unbelievable performer over the course of the last 4 months. We went from $250 to $450. I mean, it's up 85%. So maybe this is just an excuse to book some profits.
I think it's actually a buying opportunity. When you get a company that's realistic enough to take a scalpel and cut out the weak performers, that's a good sign, and that write-off is meaningless on a long-term basis. So if the stock is down 15%, I think you step in and buy it. Maybe you give it an extra day because the market does look soft. But these are the buying opportunities that people have to use in this kind of market. You cannot pay up for stocks in a market which is under pressure, especially in the large cap space.
Mark, I just want to go back just on your overall market thoughts. A lot of people are anticipating good earnings next season when we start. I think we still got a couple weeks here, but what's going to be the driver? I mean, right now it seems like the tariff talk, a lot of uncertainty. We still have rising interest rates. The financials look like hell here. If we're gonna hold and we're not going to have a significant decline here between now and the start of next earnings season, what's going to be the driver behind that, the catalyst?
Well, the catalyst is going to be company guidance. We know earnings are going to be killer. It's unusual to see sell on the news 2 quarters in a row, but we have to be mindful of the fact that even though the large caps is, sort of mirrored by the SPY have struggled, small caps and the NASDAQ 100 have made new all-time highs here in the last 6 trading sessions. So the market, if you're only looking at large caps, looks like it's struggling. And from a small cap perspective, the market has really been gangbusters. So there are really 2 markets right now. It's the small caps benefiting on a relative basis, less affected by the tariff issues, the large caps hurting. But I think you zeroed in on the one group that could turn this around, which are the financial stocks. Financial stocks are down now 13 days in a row.
Yeah, wow.
It's the first time since 1978. Now, people are saying why? Because in a period of rising interest rates, normally the net interest margin, difference between what they borrow at and what they lend at, is going up. That's great for the banks. But I think what's happening is there's a concern that company spending plans may get put on hold until people see what the tariff reality is. And we don't really know what it is because we've got a mercurial president and it could totally change. So I think company guidance is going to really be the key to how the market performs during earnings season. If company guidance is reasonably positive with great earnings, I think you'll see the large caps break out and the financials start to move up again.
Mark,
Okay.
what are your thoughts, though? And I've been publicly bearish the banks for a long time here now, and I stay bearish the banks for this reason, because I just look at this European situation and it looks like a mess. I mean, I look at Deutsche Bank at $10. I look at Barclays trading under $10 now here too. I look at Banco Santander making new lows. I mean, the European banks are such a mess right now. Don't you think a little bit of that fear is probably spilling over into our U.S. banks as well?
Very definitely. Contagion is always an issue. I don't think it's going to affect the U.S. economy. At least there's no signs of it yet. And actually, the PMI, the Purchasing Managers' Index for Europe, turned up last month for the first time in 3 months. But yes, contagion is a potential problem. The other counterweight, though, is the U.S. is the only game in town again. U.S. economy is very strong. Our bond market is strong. That's where the flows are coming. So if you want to take obviously you were very right to be short the banks, but now the question is, do they bottom out here? If they bottom out, that breaks the S&P up above 2,800. If they don't, it's going to be a continued drag on the large caps. And that's why a lot of people are focusing on small cap stocks right now.
Speaking of small cap stocks here, Marc, let's just jump right over and take a look at some of the indices. You can look at the IWM, you can look at the IJR. These are small cap or widely traded ETFs that track it. They've kind of started to break down here too a little bit. I mean, we've had a lot of leaders, and small caps have been your leaders up till a week ago, and now they're starting to. Is this just a healthy pullback, you think, here, or is there something more to be concerned about?
This is a healthy pullback, and when we get a pullback like this, I take a look at Chaikin money flow, and Chaikin money flow, which looks back over 21 days, measures institutional flows, is very, very positive, not just on the IWM, but on the SPY as well. So IWM has pulled back to support near the lower volatility band. If we get a little more selling today, I think this is a buying opportunity. I don't think that the money that's starting to flow into small caps is going to stop. In fact, if you look at flows into the ETFs, the IWM hasn't had a big inflow yet. This has been balanced by perhaps short sellers or what have you. So there really hasn't been a big inflow into the ETF. If that happens, it's Katie bar the door, because they got to buy all the stocks in the index. So I think the better way to play this is to zero in on some of the really good small cap names like Fossil and Blucora, which have had very, very big runs. So again, you got to buy them on pullbacks. You can't pay up for these stocks. But I think that the small cap game is not over yet, mainly because you've still got the residual positive impact of the tax cuts and deregulation, and the tariff headlines are going to be with us for quite a time now.
You're listening to Benzinga's Pre-Market Prep Show today. Joel Elkan and Dennis Dick, along with Marc Chaikin of Chaikin Analytics, joining us from his Philadelphia office. The Spooks just crashed through 2,700. Dennis, I just wanted to give you a note on that. But Marc, just a stress test today. I mean, I'm looking at the chart of the financials, the XLF, Goldman Sachs. These things are going straight down. Everyone's looking for good results. I mean, is the street just giving you a gift here, or are you just going to wait to see what the reaction is? Because, I mean, everyone says the results are going to be good, increased dividends and buybacks and everything, but the charts look like hell. Are you going to wait to see how they react afterwards? Maybe if there's a big flush out afterwards? Because if there's supposed to be good news, it's sure not being reflected in the charts.
Yeah, I'm not a big fan of bottom fishing, as you know. So I don't think this is necessarily good news, because if you buy them here, you're bottom fishing on a group that's making new 26-week lows and could easily make new 52-week lows. The money flows in stocks like Goldman Sachs are terrible. The reason is the market's looking for buybacks. And if the stress tests don't support aggressive buybacks in Morgan Stanley and Goldman Sachs, the investment banks are going to have a real problem. The question is, what about Citi, JP Morgan, Bank America? Well, they're in a better position to do buybacks, but the stock's not doing much better than the JP Morgans and the Morgan Stanleys of the world.
All right. We just flushed through. That trip was a triple bottom, now a double bottom, now trading in the middle, 27.90 handle. We do have a low, your May 30th low at 89.50. All right, let's go into a few earnings reports from last night. And let's start out with Triple BY that reported after the bell last night. The report here, and I am bringing it up here on my Benzinga Pro, not too bad, in line with estimates at 32 cents, and a slight beat on revenue, Dennis, but not good enough for Triple BY. Dennis? Did we lose Dennis?
I'll hop in because I wasn't hearing Dennis either.
I was on mute.
Yeah,
when we get this, Marc, and Marc, on this show, I'm not only a host, but I'm an active trader. So sometimes I throw myself on mute. And when we see the S&Ps fall about 6-7 points, I'm like,
you're in there.
Okay, you're it, Joel, for 2-3 minutes here. Because you know what? One rule I say, Marc, is never do a live radio show and try to trade.
You got to tell me, though, time. Dennis.
So I throw myself on mute, and I make a few trades, and then I come back. We're real traders here.
let me step in on BBBY before
Yes,
you
sir.
talk. BBBY has an unusual history. I noticed this 3 years ago. For 5 years in a row, whether they report better than expected earnings or worse than expected earnings, the stock always sells off. It's 19 out of 20 quarters. So if you look back over the last year, there were 2 positive earnings surprises in the last 2 quarters. The stock sold off each time. Prior to that, negative earnings surprise, big gap down. So this shouldn't be a surprise. No matter what they report, for some reason, they always sell on the news.
All right, let's look at the news. You had a spike up and a spike down. I'll just give you your pre-market low. Your pre-market low stands at 18.21, but you're now back in the 19 handle, and buyers are kind of stepping up here around $19 tight range lately. You do have, let's just use 19 as a bogey. I see some levels above and below it, but 19 even. I see 1909, 1897. So holding 19, get a little bit of a bounce. But the fact that it's, at 19 and it's only 14 cents or, just a few cents off this, looks like you got some more selling pressure to fill the gap from yesterday. 1980 was yesterday's low. We also had some other earnings, and let's go to how about the WBA report? Walgreens. Oh boy,
Okay, Joel, we covered Walgreens.
Oh, I'm sorry.
This is why I lead the show. I'm back here, Mark.
There you go. Hey,
Joe, that's Joel. He's getting older here now, so he forgets things. But we did do. Let's jump over here to Pier 1, PIR, and talk that one because that's down 15% and getting the beats here as well. I don't know what the shake and flow looks like on this one here, Mark, but the stock had a nice rally into the report. It's selling off. Long term here, I'm not sure. I'm a believer in Pier 1 imports. What are your thoughts here, PIR?
Power Gauge has been bearish. I agree with you. I'm not convinced by this earnings report, and I think these are stocks where you don't have to step in. This is the old Warren Buffett notion that you don't have to swing at every pitch on Wall Street because they don't call balls and strikes. And this is a stock where I just would watch that ball go over the plate and not step in. I think there are retailers where you can step in, like Macy's, which is killing it, and perhaps Foot Locker, although, as you said, Nike reports after the close, and that's obviously going to have a wide effect on Foot Locker. But Macy's has really been killing it. They're combining e-commerce in the store with the bricks and mortar retail. I've actually started shopping at Macy's because the promotions are so good and I can walk there from the office. So I think you've got to pick and choose your spots in the retailers, and I would definitely avoid PIR.
Before we let you go, Mark, here, I just want to get your thoughts here. Back to the tech stocks here. Let's go and talk some of the big guns here, which are really moving this morning. And I want to talk first Netflix, which is kind of your honey badger stock. It seems to go up no matter what. It's up here again this morning despite the market trading down. But it's also a lot to do with analysts chasing price. We've got Macquarie raising their price target up to $435 on this. Full disclosure, I am short Netflix right now. But we'll throw it to Mark here and get his thoughts here. So this isn't a long-term short for me because it's always hard to bet against a stock that's going straight up. But I just feel like this could be some more profit taking here, which is why I'm short Netflix. What are your thoughts here? NFLX, and then we'll go to Amazon as well.
Mentally, I'm short Netflix, but I have been for about 100 points.
I know, it's tough
This
to do.
is a tough stock. I mean, you're into the valuation game where people are raising their targets. This is a stock which now has a market cap that's bigger than Disney. Come on. Remember Blockbuster and video rentals, and they didn't see Netflix coming. There's going to be something to knock Netflix off the pedestal. The question is when, and so timing a short sale when it's making new highs is very tough. The smartest short sell strategy I ever heard was from Justin Mamus. Sadly, he's very sick, but he was the best technician, wrote a book called How to Sell. And what he said was never short a stock making a new high. The reason is you have no logical place to place your stop. So I wish you the best of luck with your short. I think the stock is grossly overvalued, but Chaikin money flow is amazing. It's outperforming the market. And I think this is a stock where you're better off shorting it when it breaks down, makes a lower low. So I'd be looking for a pattern of lower highs and lower lows, and then I'd be more comfortable shorting it. This is a tough game.
For sure. This is one I'm sticking close here too. This isn't going to be a forever trade. This is one I'm watching very closely here. If this thing was to get back up over 400, I would probably cover it. I'm just hoping for some follow through selling pressure from the day before, which we are getting here this morning. And obviously, the Macquarie price target raise is working against me a bit. But I think if the market continues to leak, that Netflix could leak here too. So we're looking at a short-term trade here, not a long-term investment on the short side, even though I agree with you, the long-term valuation seems crazy to me as well.
All right. Marc Chaikin of Chaikin Analytics has joined us here for the first 26 minutes of the show. Marc, great. We always love your input there. And keep the Benzinga boys in line today.
They're very happy, Joel. It's been great, and Dennis, to be on with you. And thank you, Spencer, for ceding the microphone for 20 minutes. It's been a lot of fun. I hope we get to do this again.
Oh, we will for sure. Okay. All right. Moving on. The S&P's made a low at 93.50. First time under 2,700 in some time. Chris, could you bring up the daily chart of the S&P here? Because there's one thing that's kind of concerning to me when you're looking at the daily S&P chart. And what is concerning to me on the long side is that you had a 5-day period in May, Dennis, where you had a low on May 3rd at 25.95.75, right? Within 1, 2, 3, 4 trading sessions after that, you were in the 2,700 handle. So you went through 100 handles in 5 days. What my worry is that where there are going to be buyers in that handle. I mean, obviously, we're not going to whoosh down in one day down to 2,600, but I just feel there's a lot of air under 2,700 here and possibly going to work our way closer to 2,600. Dennis, any thoughts on that?
I'm nervous about the market, and I've been saying nervous things about the market for a week and a half here now. I'm going to stay on the bear train. I think I'm like, it's Groundhog Day here for the last week. I'm saying the same thing. Instead of buy the dip, I think the traders need to be thinking about sell the rip until it's proven otherwise. And that will turn again, and we'll be in a buy the dip market. But right now, we are in a sell the rip market. So every time we get an opportunity to sell, people take it. I mean, look at the S&Ps overnight. Here we are. We're trading well overnight. We're up 10, 15 handles. It looks like, we're going to get a little bounce day. 8:30 in the morning, an hour before the open, we've already given it all back. Not only that, we're trading down 6 handles here now. If you're looking at it on a SPY equivalent there. And it's just the same thing. There's just money managers that are way too long here right now, and they are lightening up. We don't know when they're going to get comfortable here again, but there's people uncomfortably long right now. And that is why every time you see a stock rally, it gets hit. I mean, the WBA, if they reported that report last week, a week ago, the stock would probably be up $3. But it doesn't matter because you're reporting on the wrong day. The sentiment has turned towards the overall market. They are looking for stuff to sell. They see a pop of a buck in WBA and they hit bids. And then they keep hitting bids and the stock starts actually going into the red. So that's why I'm short the overall market right now. That's why, from a swing trading perspective, that's why, I'm short stuff like Netflix, even though I'm taking some heat on it because it's up here this morning, but it's come back in a long ways here now. I mean, I think it's just an easier trade right now. The short side is an easier trade right now. And this is what's really going to determine, if you're going to be a career trader, you've got to be able to go both ways. You've got to be able to play the long side and the short side. You've got to be able to say, okay, I think, I need to get out, or I think I need to raise cash, or I think I need to actually go short the market. That's, my best years in my trading are 2001, 2007, 2008, 2009. Why were those my best years? Because that's where volatility spikes and stocks go down a lot faster than they go up. So when you get into those years and you can play the short side, you can actually make a lot more money shorting stocks than you can buying them. But we've been in this relentless bull market for basically 8 or 9 years here now. And everybody's forgotten how to short stocks. And everybody's forgotten that you can actually make money on that side. It might just continue. And maybe this is just another blip and it's going to be a buy the dip opportunity and we're going to go right back up. That's possible, but you always got to be prepared just in case it isn't because, hey, 2007 happened. And I watched a lot of good traders, 2002, 2003, 2004, 2005, when the market was going up, 2006, and I watched them all blow out in 2007 and 2008. So you've got to at least be able to protect your capital in down markets because eventually we will get another bear market. We don't know if that's the case here right now. Right now, it's just a healthy pullback. It's very, very early. But there are signs that worry me. And that's why, I've been saying these signs here from 2 to 3 weeks now. The sign that worries me the most is the European bank situation. They look like a mess, and I don't know what is happening over there. But now you've lost your leaders, you've lost the techs. So until we can get the leaders back, until you see, this day where all of a sudden, they buy them and then boom, we close up. It basically the exact opposite of yesterday. It's hard to really get back on the bull train here yet.
Dennis, I just I'm getting a few comments in the chat here that some people had some rough days yesterday. And, we were commenting last night that the chat gets pretty darn quiet when the market's going down. So, you've been in this bull market. I know I've taught a lot of traders. I've taught you've taught people. I mean, what 1 or 2 or 3 tips could you give them that, get over the hump to try shorting? I mean, I know it's been a fantastic bull market. I mean, my recommendation would be, go very small, try a small position, give yourself a stop, look for a setup, either sell against resistance or find a support level that is breached, take it, because we want to see people have good days on when the market's up and when the markets go down. Can you give a couple tips for learning how to play the short side?
I mean, it's the same. It's just kind of the opposite of, the long side, really. I mean, you put yourself in the positions where, like Mark just said, you don't short a stock that's making new all-time highs. You wait until it's topped out. I would never be short Netflix if the stock had made new highs, but I've kind of have an out now. And, the trend is telling me, the money flow is telling me, at least in the last few days, that people are more willing to sell the rips than they are to buy the dips. I mean, every time it's rallied here in the last few days, it's been met with more sellers. So I used this morning's rally to initiate a short here, and I'm up here now because I was early, and it was way early. I didn't see it going to 398 here this morning. But, I am short from a higher level here on the 393, 394 handle, and I'm going to try to stick with it, and I'm hoping it can give it back. Now, I don't know what's going to happen here, but I've got levels to lean on. The one thing with the shorts is you never want to get, married to the position where you say, okay, I don't know what to do, I'm just going to hold it, because obviously a stock can go more than 100% against you when you're short. So it's very important to have yourself an out. But I use the same way as long as a short side. Whenever I initiate a trade, investment's a little bit different, and I don't invest on the short side. I have zero shorts in my investment account. That is a completely different animal. I never short in my investment account. That's long-term investing. I'm holding stocks, hoping the market goes up, 30 years from now, and I'm going to be able to retire. So, if the market's down 30 years from now, I think everybody's going to be in a lot of trouble. So that's a completely different animal. But on my swing trading account and my day trading account, especially my day trading account, I initiate shorts all the time. In my day trading account, I trade market neutral. What does that mean? It means I always have an equivalent amount of longs and shorts. I'm trying to take, the market movement out of it. Now, sometimes I'll get a feel, like overnight here, I kind of had a feel that we were going to go down here overnight. So I actually traded it from the short side. So I wasn't market neutral overnight. I was actually net short overnight. But 9 out of 10 days I trade market neutral because I'm trying to extract alpha. I'm trying to make stock calls long and short. Maybe it's technical setups, maybe it's 2-day moves, maybe it's ratings, maybe it's all these things that we talk about on the show. But the whole key is, I have an out. So whenever I put on a trade, and I had 29 trades overnight, I'm looking at a lot of these trades and I have an out. I identified on Netflix. Netflix would have started to go over 400 this morning. I would have got pretty nervous and maybe thought about covering that. It's pulled back here now, so it's still in. You got to give yourself some wiggle room, but you don't want to let the thing get away from you either. So that's the key to all trading is when you first initiate, don't think about how much money you can make. Think about how much money you can lose. And that's very important on the short side. And
another exercise too, if you're naturally a buyer and you say, hey, I want to buy a particular stock at $60 and it's trading at 60, 70, it's a weak tape. Well, maybe, initiate the short with the philosophy that it's going to come to my support level and, I can either, cover the short at that level or reverse it going to a long. Dennis, I know you're pretty good at doing that. I'm not so good at being able to reverse in the position, but that's something that, is a way that if you think you want to buy the support level, maybe short ahead, let it come into it. We do have some breaking news on Amazon here, and Amazon is to acquire PillPack. That's an online pharmacy. That's not good for your Walgreens and your CVS's.
Oh, wow.
Yeah.
CVS is really dumping here on this news here now. So now I have some fundamental news here. Maybe some people knew earlier, and that's why they hit the WBA on a pretty good report. But holy cow, this is really good. CVS down 6%.
I think this goes into the healthcare business, right? The Amazon, JP Morgan, Berkshire thing, right? I think this is part of that initiative. But so this is the first of many of these headlines, I would assume.
Yeah, Walgreens.
Think about everybody who bought that WBA when it got added to the S&P 500 a week ago. Well, that's $68. It's now 62. I'm going to tell you one thing is when stocks get added to an index, they've gone up 5, 6, 7%. Those moves, Mark even talked about it, those moves often get retraced. Those are classic shorting opportunities usually. So when I see a stock get added to an index and pops 5, 6, 7%, it usually is an opportunity to fade it. And it's because it's getting added to an index, so indexes are going to go in. But really, there's no fundamentals. It's not better for the company. It might be better for the stock in the short term because there might be some short-term indexers that got to buy it. But there's no fundamental change with the company because it got added to the S&P 500. So I always think about those opportunities, and those are some of my best shorts is actually fading those. I did not do it in the case of WBA, kicking myself here now. Because obviously, and you're a little bit lucky here too, because you get a bad headline, you get a pretty good earnings. The shorts on WBA are pretty lucky today. I mean, it's a pretty good report, and boom, they get a lucky headline here. The ones that initiate ahead of it, anyways, from Amazon, and now, wow,
$62, Dennis. But just real quick. Anybody that is trading this stock, there was a double bottom at 62.12 and 62.15. This was back at the end of May and early June. So potential support here at 62. You already got a little bit of a bounce, but 62 is my level in WBA. And then for CVS, I'm sure that's on the skids too. That just made it, that was just kind of hanging out, but that just made a low at 64. And what do we got in the daily chart? You got a low at 64.65. So another buck until you find support in CVS. Just going along the theme of Amazon here, since we started on this subject. Dennis, I don't know if you saw the news, but your Amazon packages, which usually show up in a UPS truck or an unmarked vehicle or in the hands of a mail carrier, may be soon delivered from an Amazon van. So if Amazon is getting into a van, a delivery, what do you think is going to happen to FedEx and UPS?
I mean, we've heard this before. I think, it's been coming, though. And FedEx has been down for 9 of the last 10 days, just annihilated here. UPS, same story. Both of those stocks down here again. So they're nervous. Some of their business might be going away. I mean, Amazon, 9% of all retail sales or something, and probably even more online. I mean, that's a lot of their business is coming. Now, who is it that there's one that has more than the others? A UPS or FedEx?
Spencer was digging for that this morning.
Amazon packages. There's one, I forget which one. One of them is really, more contingent or more delivers more packages than Amazon.
I could guess, but I don't want to be wrong.
I thought it was UPS.
50% chance, but I mean, you're right, Dennis. I feel like we first heard about this maybe last fall.
A year ago. I'd say a year ago. And they hit them. They hit those stocks on it, but they came back. People forget. Well, they're not forgetting here this morning. I mean, but here's another chart. I mean, look at the evidence that we're getting that this is maybe more than just a healthy correction. I mean, this FedEx chart is absolutely awful looking. We've talked with the banks for a month. I mean, everybody, and everybody's been talking bullish on the valuations on the banks. But let's be honest here. On this show, we've been talking bearish about the banks for the better part of 3 weeks now. 3-4 weeks, and I'm still going to stick with that theme. But besides the banks, we're losing so many other leaders here now too. I mean, we still have the techs are still there. They had a hell of a run. They haven't broke yet. But even some of your tech stocks, like Applied Materials, stock looks awful. LRCX, which we were talking about before, Lam Research, continues to break down. I mean, we've lost some tech leaders here too. But this FedEx UPS is just a mess. FedEx especially.
And someone's saying in the YouTube chat that UPS is the one with the more exposure.
I think it was UPS. But anyways, regardless, it's not good for either of these companies. So you're seeing them both trade down here this morning. I mean, looks like Amazon's having a little bit of, to do with some sell-offs in some certain sectors here this morning. But obviously not good for health or for your drug stock or your delivery services. But
on Monday,
blame Amazon.
On Monday, we had Sean Udall,
the Death Star,
right, of the tech stock strategist, and I mean, he was a growling bear on Monday, talking about a lot of stocks. And one he talked about it. I have a really hard time doing it, but look at Red Hat since it had that gap down. 150 was the high, or excuse me, 149 was the high on the gap down day. It's traded down. It's trading down in the pre-market here at 130. And then I think, what else did he mention? AMAT. I mean, that chart looks like it's bearing down on some very important monthly support at $45. Adobe. I mean, he's talking about these stocks going down possibly another 50% and still being overvalued. But, the market has a strange way of bouncing back. And, we're talking about a long-term uptrend here. Just a little weakness, I think, in the interim here until we get to Q3 earnings season. Spencer, we got some more earnings stocks to cover?
Yeah, we do. I just want to say in the YouTube chat, JJ Bud is saying that he's a merchant on Amazon. He sells shoes on Amazon. He said that UPS gives Amazon sellers 50% off on shipping fees. So they've got a lot of, they're all tangled up with them. So you're right. Blame Amazon. Blame Amazon is the new blame Canada. So you're off the hook, Dennis.
I'm off the hook. Let's blame Amazon. Yeah, now, Kramer will be running, Kramer's on vacation this week, but if he wasn't on vacation this week, he'd be running the Death Star show there tonight. So we'll look forward to that Monday when you're back, Jim Kramer.
All right, let's move on to some.
So many stocks to talk about. We talked Chipotle briefly there. But let's really break into the headline here now, because Chipotle is now down 20 points. It's getting hit hard here. Spencer, can you give us the details here once again here, because we really didn't jump into it too much with Mark.
Well, so they had a business call update after the bell. They're launching. There's a lot of headlines. They're launching a loyalty program. They're restructuring the company a little bit. They're going to incur a cost of about $130 million for that. They're going to, the CEO said some lofty things about doubling the business in a few years. They announced their earnings date for the next quarter. And I think those were like the biggest things, and the store closures that I think we already mentioned, right? So, and this morning they called it a price target raise from Stevens. So were those not the biggest, the most notable headlines to come out of that? I don't know what else there was.
It's been an impressive run. This is going to make the chart look broken here as well, too. So now I think rallies get sold. You get anywhere up near 445, 450, I think you're in trouble. So people who are coming in here and buying the dip, sorry, Mark, I'm not on board with you on this one. I think you're going to be early here. This has just been an incredible run from 350 to 450. There is a lot of air. Yes, we have a level around 427. That might be the first level that we bounce, because we had multiple lows there back in the end of May. But I think there's more pain ahead here for Chipotle, and I'm a seller of rallies. Sell the rip on this one, too.
I mean, I'm agreeing with you, but I mean, I didn't like it at 320 either. So, I mean, I'm not making any great call here.
Oh, I didn't like it.
Yeah.
We didn't like it all the way. We didn't like it from 500 all the way down to 250. We were right. We stayed not liking it and rallied all the way back. So I guess we should have started liking it. Mark started liking it with the power gauge, the Chaikin power analytics, but we did not. So I've been, bearish Chipotle all the way down, all the way back up. I still stay on the bear train. I don't think it should trade with the valuation that it does. I think, they've closed some stores. I think they have a lot of issues. I think long-term, I'm not a believer in Chipotle. I believe, it's still going to be around, just not worth the valuation they give it.
And, if you want to look at a chart, what happens when stores close, look what they did to Starbucks. I mean, that started going down and it's still going down. So
I don't think that's it. I mean, they closed
Starbucks is a mess.
They closed they closed it for one day. They closed one day of closing. I don't think maybe that was
they closed 150 stores. They closed 150.
That's right.
But Starbucks was a massive quarter. I mean, it was ridiculous. I could not believe that stock, it got hit on the initial quarter and bounced. It was the kind of market we were in. It's funny how it turns. We were in a market that they just want to buy everything, and Starbucks pulled back $3 on this terrible numbers. And then it rallied it all the way back and was basically trading flat that night. I was like, are you kidding me? This is the worst. They lowered guidance. They did all this stuff, and you're going to rally this thing back? It was nuts. And then Jim Cramer started talking about it. Props to Jim Cramer, because he actually was multiple times said, this is crazy. This thing should be down 5 points on it. And he was absolutely right. I mean, the one thing, we talk about Jim Cramer on the show, is, sometimes he makes a lot of sense. And I was completely on board with him on that. And it's now down significantly. So props to Kramer, because he was all over that.
Yeah, that was, and now it's unchanged. It's trying to put a couple lows in here. I'm going to look like you had some heavy volume on the 5-day decline. The volume is starting to kind of lighten up a little bit. So you might get a little bit of seller's exhaustion here and get a little bit of a rebound before they reload. Closed right on the low of the session, though, 49.84. Boy, you get your first close under $50, Dennis, and that's since August of since July of 2000. No, go back even. We haven't closed below $50 since April of 2015, and that was $49.58. So
coffee's too expensive.
It is. I'm not gonna pay.
I've been saying that for years too, though.
You know what I get when I go there, Dan? You know what I get?
What do you get?
I get a double shot of espresso. And then I ask them for like just a little bit
What's
of
that cost you? $10?
No, like a shot of espresso is like $1.50 or something like. So I get a double shot of espresso, and I'm like, oh, could you just put a tad of coffee in there? They're like, sure. So I get the double espresso, and then they put the tad of coffee in there, and I pay like $2.50.
You figure things out, Joel. You figure out ways, man. He's the first person that ever got the Shake Shack burger for free. He works things out, man.
I'm not going to pay $5 for it.
You're good. You're good. You're smooth.
And at Panera,
he's just such a smooth talk.
Panera,
sometimes he talks me into these bets even on the show that he gets from me. He's such a smooth talker. You really got to watch this guy.
Because Panera is easier.
He's playing the system.
Panera is easier because you just get the double shot, and then they put the coffee right out there, so you can just go poof and just get it real quick when they're not looking. So, but. Anyways, let's cover some more earnings stocks.
I wanted to go somewhere. I forget where. Oh, yeah, it was a great question in the chat. Hunter69 asking me, if you cover a short in the pre-market, do you set your limit price at the bid or ask? Okay, I'm going to tell you, I take liquidity usually in the pre-market. Why is that? Because there's usually not much in there. And if you put a bid out there, you actually sometimes can push the price away from you. Sometimes, they're a step ahead of you. So I don't like having my bid or ask out there. I don't like to if I'm trying to buy a stock, I don't want to throw a bid out there and actually make it look stronger and push the price away from me. If you're a big institutional trader, you know that as well. I mean, even 100 shares can move the price in the pre-market. So I usually am just taking liquidity. How am I doing that? Two ways. I can use a discretionary order, which is basically an order where, okay, I'll say I want to cover at like $50, just for example. Stock XYZ, maybe I short it at 50-50. I want to cover it at 50 if it gets down there. I've deemed that's where I want to cover. I'm not going to put a limit buy at 50 because then people can lean on your bid. You can trade ahead of you. There's lots of different ways that they can get you that way. So what I'll do is maybe go down to 49.50 and put 50 cents of discretion on it. So what happens is if it goes offered at all at $50, it'll instantaneously lift the offer. And that order is sitting on the exchange. So we're talking, milliseconds it's going to get executed in. So if that goes offer at 50 at all, it will automatically lift it. So I love the discretionary order. I use those all the time. Otherwise, if I just see a stock coming in and I see it offered at a pretty good price, I might just lift the offer. If I'm long a stock, I might just hit the bid. So for instance, I've already made this morning, let me just go to my trades. So this morning I have made executions. I have made this morning 22 trades already since, I've been on the radio show. I started trading. Wow. I got up at 4 in the morning.
I knew you would. I knew you'd get up at 4 today.
So I only made 2 trades at 4 in the morning. But since 7 o'clock, I had Twitter long. I sold my Twitter long, and it was basically I had a discretionary order out there. I think I sold 44.05 and 44. So I'm out of my Twitter. I sold Roku. I had long. I sold that this morning. Multiple prices, 41.60, 41.83. Actually, I think that was a high tick I got on that too. But I had discretionary order on that one too. I was sitting up there like $42 with like 40 cents of discretion. Somebody bid like 83. I got boom. So I was willing to sell to 41.60, but somebody just happened to bid even higher, and I got a better price. It's the nice thing about the discretionary order is if it's bid, like if you've got a 41.60 offer out there, and you're going to get 41.60, you're not getting any better price. But if you go 42 with 40 cents of discretion to sell, well, if it goes 41.80 bid, I get 20 more cents. I'm getting 41.80. So that's why I like using the discretionary order too. It gives me a chance to get a little bit better price as well than maybe I even wanted. So I sold my Nike, which I had overnight. You know how I like to buy those stocks ahead of the moves. But I've sold a lot of these stocks here this morning because the S&Ps were starting to leak. So I was getting out of my longs and then trying to play the other side of it. But I had IBM long too, and I sold that as well. Although IBM is upgraded, or not upgraded, but it got a buy rating from Nomura here this morning. So this one, if you
Jaslyn Man wants to know, why are splits so rare in this era? And I'll just make the general comment. I mean, high price stocks just they're in vogue. Kind of started by Warren Buffett. Amazon, Apple's done it once or twice, but I just don't see any reason, why some of these companies don't split. But, Google did, but, split it into two separate companies. Dennis, do you have any theories on why?
No, you're hitting the nail on the head. I mean, it's just popular now. Years ago, you always split stocks. Every company gets up to $150, they split it. They always thought that lower price stocks, would attract more liquidity. Lower price stocks were more attracted to your retail client. I mean, now the retail trader has such low commission structures. If they want to buy, a small amount of Google, they can buy 5 shares. They can buy 2 shares or even 1 share if they really want to buy a little amount. With $5 commissions and the way it's set up here now, that's possible. So it's the structure of it that's changed a lot here too. I mean, you go back to the 80s and 90s, people were paying a lot more to, before your discount brokerages and the internet came through, they're paying a lot more. So the lower price stocks seem to help, with liquidity and also to allow the retail trader to get in. Now it doesn't matter as much because commission structure is so much lower. So that's a little bit to do with it. And it's just popular. It's popular now to have a high price stock. It looks cool. It's a cool thing to do. Okay. So that's why a lot of companies are doing it.
Just a little question here from TJ Mosley on paychecks yesterday, and that got slammed. I see the report here. They missed by a penny, and they missed on revenues, and it just picked on a bad day to miss here. A really big red candle
yesterday's day.
Yep. Really, really bad news here. It closed on the low of the session. The low was 66.65, and I am not see if that holds. It's obviously not getting much of a bounce. Had another low in that area, 66.69. Yeah, a couple lows there, but if not, you can look at this thing at 65.93 and another double bottom at the 65.40 area.
I mean, it just seems like every stock that's reporting here right now is going down. Walgreens reports a good quarter, and obviously the Amazon stuff is affecting it now, but it was down before that Amazon headline. So it's just the kind of tape right now you're in if you're reporting earnings.
I got one that's not down. Not down. ACN, Accenture. Yeah.
Give it some time.
a buck 79 versus a buck 72, and sales of 1.08 versus billion versus that sales number is not comparable, but the EPS was 10.8 versus 10.04. So yeah, they beat on the sales, they beat on the EPS. They raised the EPS guidance as well for the fiscal year. Nothing crazy there, just a 6-cent raise on the low end of the range, but still a beat and a raise.
I'm a seller of this. I'd be a seller of this. A 160, 161s, all kinds of overhead supply, 163, 164. I think if you're chasing it here right now, I think you're on the wrong side of the trade. I don't know if it's going to go red here today. It's a pretty good report here, but I'm not buying it up $5. I'm not buying any stock that's up $5 here on this tape. And now if the market turns, we end up 200-300 Dow points here today, this stock has a chance to obviously go higher here, but I think this is going to be one that gets faded here too. I wouldn't be surprised if this gives it back.
Pre-market high 161.87. That was on your first attempt. Second rebound got to 161. I just to be really focusing on here the 4-day high of 160.50. You are 50 cents away from that, so you want to see that get lifted and go up to the pre-market high. But very important for this, especially in a red tape here, for this to maintain its upward trajectory. I just wanted to mention one stock from yesterday, and you folks have been asking about pre-market trading and how Dennis kind of works things. Great example yesterday was WWE. I mean, that thing traded up to $79 in the pre-market, and then just started to leak. And you could tell that there were step-down sellers here. They didn't even worry about 77 in the pre-market. They were ganging up at 75. You could see that for several brackets. And then they stepped down to 74 just before the opening print. And then they kind of took their foot off the gas a little bit. You got your 74.17 open, 74.72 high. So if you shorted off of the open, you might have been scratching your head. But when you came back down through that opening price of 72.12, I don't think you probably take any heat on that trade at all. But just making a little use of the pre-market trading.
I mean, this just is more evidence that sentiment has turned towards this overall market. I mean, think about how many scenarios we saw in the last month where a stock gaps up $5 and ends up 15, like the Tiffany's and the Ralph Lauren's. That is not happening now. They're gapping up significantly on good news, and they're fading, and they're giving it back. There is just sellers in everything here right now. It's all evidence. It's all trading is like building the evidence on which side that the trade is on. And right now, I'm going to continue to say the trade is on the sell the rip, selling the rally, because you see it again and again and again. Stocks are rallying on good news and giving it back. And that's why I can't, get on board here with buying any of these smaller stocks right now. I'm not even thinking. I don't enter the day right now thinking about what I can buy. I enter the day thinking about what I can short. And, and it's going to change. Maybe in a week we're talking different here again, but we've been talking bearish here for a week. I'm going to stay on the bear train until it's not working anymore. And right now, I've short a lot of stocks overnight. You know what? I got paid this morning. So I'm, now been covering them in. Now, am I early? I'm always early. I'm scalper blood in me. I'm always early. But, it's a 2-day move that I was playing last night when we were trading up 15 handles or 12 handles on the S&P. It felt like a good opportunity to start initiating some shorts. I was early. I actually started initiating when we were up 6 handles. And then I was taking some heat, and I was like, maybe I'm going to be wrong. But, here you are an hour later. It was, it's not rocket science. It was just I was on the right side of the trade. It was the easier side. People are inclined to sell the rip right now, and the people who are trying to buy the dip continue to get run over. Look at some of these momentum plays. Like we were talking the IQs and the BILIs. Look at what they did yesterday. IQ. So you had a good 2-day rally here in IQ. It went from $45 down to $32. And then it rallied all the way up. Well, yesterday you got the sick open up at $37, up another 2 points. And what they use as a selling opportunity. It gives it all back. It's now trading in the red. I think the trend is down here on this thing now. This is broken. I would not be surprised if this thing is $20 here again. Not today, not tomorrow. But if I look at this 2 weeks from now, if it doesn't turn, this thing could be $20 here again. I kid you not. BILI has given it all back. Basically, we were a stock where it's $13 up to $23. It's now 13 here again. That SOGO that we were in love with, that stock's pretty much given it all back too. 10 to 15 in a week and a half. We all did very well. Chat was awesome. Spinner was all over that SOGO. But it turned. It turned, and they're coming down here now too. So there's no reason to jump in this stuff here right now. Maybe at 10, that's kind of where it broke out from. Maybe you could try for a bounce trade. I mean, no better example than Dropbox. DBX from 30 to $43, and just basically straight down for a week and a half here now. It's going to test that 30 again. Maybe it bounces at that old support level, because that's where it found hard support before. Maybe you find some, people who are saying, okay, it's got to bounce at the first time. I might even try for a bounce level at 30. But if it doesn't work, be careful, because sometimes these things just take out the floors too. It's got a lot of momentum on the downside now.
Can we not talk about IQ anymore? Can we make that a stock?
Is it done? It's like dry ships now.
Yeah.
Yeah, IQ story is over. The chat was all over that.
I faded the chat.
Scott was the original one from my Twitter account that gave me IQ. And I thank you, Scott. I doubled my money on the last portion of that anyways. That was a really good one. So they're fun. They're fun to play those things. Usually I play more boring stocks. So I was, it was fun to participate in some of the Momo plays for once. But even looking at, some of these other ones, like look at the chart of MOMO, which is Momo. We were talking Momo. That stock was $54 a week and a half ago. It's $42. It just gave back 12 points. It just gave back half of its move here for the last basically 3 months. Gave it all back in 1, 2, 3, 4, 5, 6, 7 trading sessions. That's why the short side, if you can figure out the timing on the short side, you can make money fast on the short side.
Okay, let's do 2 quick earnings reports and then wrap things up.
More earnings?
McKesson.
McKesson,
sorry, not McCormick, not McKesson, McCormick.
Yeah.
MKC, not MCK. I was confused those two. MKC reported this morning Q2 EPS $1.02 versus a 93-cent estimate. Sales 1.327 versus $1.32 billion. So a nice Q2. They reaffirmed their fiscal year EPS guidance as well. And how's the stock doing?
It's up $3. It's not a stock I widely trade. It's widely followed. 2,600. It's up on light volume. Again, caution to the buyers, people who are buying these things that are up. It's going to be in the odd stock that is going to go up, but you are in a tough tape. That's just the bottom line here. Stocks are up 3-5 points, go up 4 or 5% in the pre-market right now in this tape tend to give it back. So you just got to be cautious here because it's just a tough tape.
And you're climbing in the pre-market. I don't know how much. Is there any trades in this of any significance here? Let me pull up the actual volume. Couple thousand shares trade. You got a last print at 109. Go back on your dailies if you're trading this, and you can see that you had a high at 109.59. So that's a target. The longer it takes to get up to that level, perhaps you're going to get a fade. But 109.59, and then the all-time high for the Spice Company is 111.07. All-time closing high 107.35.
Was there
We didn't
one
really
more?
talk any ratings. Twilio got an upgrade at Argus. That is up somewhat here this morning. If it was a normal day, it'd probably be up $1.50. It's only up 40 cents because it's not a normal day, and people don't want to buy stocks right now.
T-Mobile upgrade at Wells Fargo to outperform.
Up 40 cents. Again, not a normal day. On a normal day, it's probably over 60. Not a normal day. People are gun shy here, so they're not buying them.
Madison Square Garden, I think a little late to the party here. Upgrade at Jeffries to buy.
Oh, yeah. Give the MSG news, though. That was big news. You're going to spin off the Knicks and the Rangers, maybe.
Wait, what?
Yeah, that's the news last night, MSG.
Wow, yeah.
Potentially spin off the Knicks and the Rangers.
This is what I get when I'm not like at the office. Wow, didn't even see that news. Yeah, they are plans for a potential spinoff where they would spin off the sports business from the live entertainment business and create two separate companies. Wow, that's very interesting.
Wow.
So it's trading up, new highs.
This is takeout target if I've ever seen one. Oh man.
Yeah, you got a potential spinoff. So it's good news here. Stock's going to be up here on the day. I'm not chasing it here either, though, just because it's the day not to chase. Something up $30 is kind of scary. It was trading up 296. I don't know. How high did it get, Joe?
A couple thousand shares have taken as high as 96.50. So I'd use that as a target on the upside. If the longer it takes it to get up there and clear that 296.50, I look for a little bit of a fade. You are going above the all-time high. The former all-time high was 284.19. So $6 above. If someone had a target at 285 or 286 or 287, they're going to be out there selling today. So we're going to wrap up the show here. S&Ps are down 8. We made a low at 93.25. You probably had a few sell stops there at that $2,000 level. That's why you got a quick flush to 26.93.25. It's important to retake that 2,700 as well as the closing price from yesterday at 0550. Targets on the downside, 89.50, your May 30th low, 78.75. That was your May 29th low.
Look at Hunter playing the momentum. He said he just covered his first ever short position, WBA from 62 down to 59.90. He just made 2 points on it. Congrats there. See that short side? It's fun to play too. Just be careful.
Really?
Because short side you can get burned on as well.
That is unbelievable.
Nice trade,
go,
Hunter.
Wow, that thing's
down.
He must have said, well, when I said that support at 62, he said he just hit the sell button on that one. Wow.
He says he feels a little dirty.
Welcome.
You know something, though?
Welcome.
There is people who just flat out believe it is un-American to short stocks, and they are dead set against it. I will tell you, shorts have a huge place in this market. They serve a purpose because they reduce the bubbles that are created. We know you can see, when you can't short something like Bitcoin, it goes straight up forever. So a lot of people get burned. So they make bubbles smaller. They also add liquidity to the markets because when stocks are going straight down, usually the first buyer is going to be somebody who is covering their short. So because you're not scared, to just throw your bid out there when you're covering a short because you're locking in a profit. So liquidity is essential. We saw this in the financial crisis. They banned shorting on all financials for 3 weeks. During that period, the stock market was down 18%. Financials were down 23%. They're like, yeah, that didn't work. Why? Because shorts are essential to the market. So when people say shorting is un-American, they don't understand market structure. You need shorting in there because if you don't have it, you lose a lot of liquidity and people are not going to be able to get in and out of their trades. That's the truth.
Great point. All right, that's going to be it for our show today, folks. We'll be back with you tomorrow. We're going to be joined by Chris Brecher, who was formerly with Simpler Trading, now out on his own. He'll join the show tomorrow at 8:35. Thanks to all of you in both of our chat rooms on YouTube and premarket.benzinga.com. You can catch our podcast on iTunes, SoundCloud, Stitcher, TuneIn, and Google Play. Just search for Pre-Market Prep on any of those platforms, or go to youtube.com/BenzingaTV and rewatch the show there. Thanks to Marc Chaikin for the hospitality and for coming on for about 20 minutes this morning. Hope you guys have had a good morning. Hope you have a good rest of your day, and we will see you guys on Friday.